So we've gone through DeFi summer, we've gone through stablecoin and then RWA. You just raised a new fund, massive fund, 2.2 billion.
Maybe we're leaving the hoodies and hackers era of crypto and entering, let's say, the colored shirt era. If we go back to the time we first met, the transaction fees on Ethereum were probably $10, $50 a transaction. It would take several minutes for those transactions to settle. But at some point, the revolution wins, right?
Right.
I think maybe a lot about the American Revolution or the French Revolution, where you get a lot of what you want, and at some point, then you have to govern the country moving forward.
Right.
You can no longer kind of do infinite revolution. Speaking personally, I think a huge success for crypto as an industry would be if we stop calling crypto an industry, right? No one says, I'm an internet company, I'm an internet fund. Outside of literal cloud service providers, there are not consumer-facing businesses that would describe themselves as like.
Welcome to On-Chain Capital, your front row seat to the future of finance, from Web3 and AI innovation to digital asset policy and the power shift between East and West. Today, we're going to unpack it all with Guy Wuollet, general partner at a16z Crypto. It's so good to see you again. Thank you for coming on the show.
Thank you for having me, Sean. It's great to be here.
So you and I met a number of years ago. I think it was like 2022 or something. It doesn't seem like a long time in calendar years, but in crypto, it's been many, many cycles, right? So we've gone through DeFi summer, we've gone through stablecoin and then RWA. You just raised a new fund, massive fund, 2.2 billion. Walk me through what was the decision point in terms of creating such a massive fund, but also more importantly, if you compare that to the last fund you had, Fund 4, I believe it was, it's roughly half the size. So is it a matter of the market, or is it more of a focused area in terms of where things are, what portfolio you're trying to build?
Yeah, I think the opportunity that we see, at least in the immediate short term, is to bring financial services on-chain. I think a number of years ago, we would have called this DeFi. Today, if you go and talk to someone at a bank, they call this digital assets. I think maybe the right term would be on-chain finance. I think there's kind of this massive digital transformation happening to financial services generally, and that's being led first, I would say, with stablecoins, and then certainly with sort of other new back-end rail products to sort of make your financial services more efficient, but also new distribution mechanisms and new derivatives. I think a lot of what's happening in crypto is a second or third or nth order effect of stablecoins and perps really having very strong product market fit. So certainly that's a lot of our focus with this new fund. I also think there's a bit of a convergence happening between crypto and AI. And it is, I think, always a good sign. We have two AI-focused teams at the firm, an infrastructure fund and an applications fund. And when those folks come and are asking us about using DeFi or agents making payments in stablecoins for goods and services, I think particularly for API management today is where we're seeing a lot of interest and energy. That I think is obviously a positive signal and something we're focused on. And so I think the idea of raising this fund was to capture the kind of time and opportunity we have now. And as you were saying, we've known each other for a couple of years. Crypto goes in cycles. It feels like we're maybe ending the beginning of crypto adoption and moving into the mainstreaming of crypto. Something that we sort of quip on our team about is that maybe we're leaving the hoodies and hackers era of crypto and entering, let's say, the collared shirt era. I don't think everyone's wearing a suit to work every day, but between us, we have a collared shirt and a sport coat on. And so maybe the combination is where we're going as a group. And so that was a lot of the inspiration for raising the new fund and a lot of our focus.
I mean, the fund at 2.2 billion is still massive, right? But I continue to meet with a lot of developers and a lot of folks within the ecosystem, and they keep saying, look, there's no dry powder left, right? There's no interest in going into the digital asset industry, and yet you come out with this massive fund. I mean, you must be seeing something that is different than what many other funds may be looking at. Is it a matter of that you're a16z and you naturally look at things differently? Or are there really opportunities that you're really uncovering that others may not be looking at?
Well, I think a lot of the focus of classical crypto funds was investing in, pure blockchain infrastructure, L1s,
Mm,
L2s, the like, investing in things that were, built entirely on chain and fully decentralized. And I think the whole space is going through, I would call it a market annealing process. Annealing
right.
is in metallurgy the process of taking two metals and making them both, more flexible so they can be combined into an alloy. And I think that is a lot of what is happening today with crypto startups being willing to make, sort of changes and being willing to be flexible in the structure of how a protocol works, for instance, in order to serve the needs of a new customer set. And I think crypto as a space has very well served the needs of individual retail consumers, has very well served the needs of, let's say, cypherpunks. I definitely, would have thought of myself that way, and that was a lot of my inspiration for getting involved in crypto to begin with. But I think if we want to serve fintech customers, if we want to serve traditional financial institutions as customers, the things they want out of a blockchain protocol or a DeFi protocol are a little bit different. And so I
Mm,
think the whole industry is kind of going through this morphing and shaping process. And I think if we look back in 10 or 15 years at this time, I would say, the market is pulling out of crypto on-chain financial services as the focus. And so, maybe we see this uniquely. I think this is
mm,
relatively obvious. So yeah, I think there's kind of a clear opportunity, and I would say it seems somewhat obvious to us because we recognize fantastic founders, really talented people coming out of fintech companies, coming out of banks, coming from asset managers to start new crypto startups. And in many
mm,
cases, it will not be like a crypto-focused payments company. It will just be a payments company.
mm.
And so I think maybe some of the branding or the way a company identifies itself has shifted over time. I would take that as a big win. I mean, I think there are pretty few companies today that would identify themselves as an internet company. It's a company that happens to be built on the internet because almost all companies are really built on the internet today. And I think crypto is maybe going through that process where there's no longer a crypto-specific industry. There are a lot of products that are built on top of a blockchain because it's a more efficient way to offer the service, or it's a more composable way to build a protocol. And so, I'm not sure that's a totally unique insight, but I think that's a lot of where we see the future going.
I think a lot of the insight that you just shared, right? Like obviously we are seeing all the news out there, and increasingly more so the news are coming from the big financial institutions, the banks, rather than the smaller players that we might have been seeing much more on a token launch or a TGE here and there. And I mean,
Yeah.
to that point, you mentioned a bit about the base layers, the foundational infrastructure, and you guys have backed Solana and Layer Zero and
Mhm.
Eigenlayer, some of these very successful projects. And a question to you though is there still room to build these foundational infrastructure? Is the game over? The fact that most of the traffic's already running on a number of different chains, but many of the other chains, other than activities trading their own token, there's really nothing going on there. So is the game over on that front because that has already been built? Or do you still think there is room to actually innovate in that regard?
I would say the game is never over, especially in technology, right? Like I
Mm,
think Mark is relatively famous for saying that he showed up in Silicon Valley in the mid '90s and thought he'd missed it, and then of
right.
course builds the web browser as kind of the next era of where things
Mm,
are going. Something we talk about a lot is the idea of an apps infrastructure cycle, where
right.
the infrastructure is not very good, so people have an incentive to build much better and more performant infrastructure. That new infrastructure unlocks a new set of applications. Those applications kind of push the infrastructure to the limit, which incentivizes new development and investment in infrastructure itself, and the cycle repeats. I think you can see this with mobile phones, for example. Like a lot of the
Mm,
great consumer apps of the 2010s were not possible before you had uh, a phone with a high resolution camera and GPS and a built-in payment mechanism. And if we wind the clock back 5 or 6 years, I think a lot of L1s were very decentralized, but they were not very performant. Uh,
mm,
you know, if we go back to the time we first met, the transaction fees on Ethereum were probably $10, $50 a transaction. It would take several minutes for
right.
those transactions to settle. Today, on any modern blockchain, you can send a stablecoin in under a cent that settles in less than a second to anyone on Earth. And I think maybe we take that for granted in a very, David Foster Wallace, this is water sense, like that's just obvious to us. But if you haven't been focused on the improvements in blockchain infrastructure over the last couple of years, I think they've been drastic. And so in my mind, I would think we are at the point in that app infrastructure cycle where the infrastructure is very good, and we're trying to figure out which applications best commercialize and use that infrastructure. And I think my short answer would be a lot of the product market fit we're seeing is from financial institutions, either startups building new financial institutions or existing financial institutions adopting those very performant blockchains in many cases to replace their core backend ledger. And so I would say yes, absolutely. There's still I think a very important opportunity to build foundational blockchain infrastructure. And I think one of the projects you mentioned we work closely with is Layer Zero. They recently announced Zero, their new blockchain, and have gotten really interesting partnerships with folks like Citadel and DTCC, who are as we've been alluding to or saying abstractly, like literally building the future of finance on chain. So I think if you would like to build a new L1 or a new L2, I think you need at least one of three things: either an existing network effect, you need a true 0-to-1 technical differentiation. I would say performance is probably not that anymore. I think privacy is probably the most important 0-to-1 technical differentiation remaining today. Ali on our team has talked about that a lot, and I agree strongly with him. And then third, I think you need a distribution advantage. If your idea is to launch a new chain with relatively little technical differentiation, or it does not already exist and you're launching it from scratch, then I think in many cases there are companies or teams that are focused on launching a blockchain to vertically integrate some application. And that makes a lot of sense to us. I think we'll see strong success for app chains moving forward. But yes, my short answer would be there's a lot of opportunity.
So I think what you're saying is that I still have people come up and say, hey, I'm building a layer 3, layer 4, right? But when I ask them exactly what they're doing, it still seems to be the same generic answers, right? Solving the blockchain trilemma and so on and so forth. I think based on what you just described, you are, dare I say, you're now leaning, or not leaning towards, but you're really describing the temples and the arc of the world, right? The vertical stack, already distribution, ecosystem already in place, and having those as the foundational infrastructure to drive those particular workloads. That's, I think, what you're talking about.
Yeah, certainly. I think there's a time for every idea. Like the current crop of really compelling new projects to us, and I would certainly put Tempo, Arc, Canton as epitomizing this wave, are chains that enable privacy, and privacy in a sense that existing traditional companies can integrate with, and then have some either meaningful partnership with or have been incubated by a larger fintech company that has strong distribution. And I think if you have those two characteristics, those sorts of projects are seeing fantastic adoption today.
Okay, so let's move over to DeFi, right? I mean, this I think 2026 has been a poster child for maybe all the wrong message coming out of DeFi, right? With all the drift and kelp DAO, coming to mind, right? Is DeFi evolving as well in your mind from the I'm just a protocol, I take no liability, I'm just, a piece of technology, to now you really have to focus on, security, privacy, and then more importantly, something that might be a little bit intangible, but very important, very necessary, trust. So what are you seeing in the DeFi space now, especially given what has happened the last few months?
Yeah, I think you're alluding to the fact that there have been some significant smart contract hacks. And yes. I guess I would say two things. One, that's not new. There have been hacks in the past, unfortunately. Two, I think a lot of the reason we see smart contract vulnerabilities is because those vulnerabilities have existed for years, and people have not been able to find them. But if you throw one of the sort of cutting edge LLMs at it, you are able to find some of these security vulnerabilities.
I see.
And so I think we're going through a period of time in which human beings have written a massive amount of software, and there are, some latent bugs in that software, and the sort of infinitely capable, never gets tired, always running AI models will find a lot of the bugs in that software. And I think that will be, somewhat of a challenging period for security today. I think moving forward, all of the code that gets published, I would expect to be somewhat more secure because, before it has been pushed to production, it's gone through the same sort of auditing process that today we're seeing for existing code in production. So I think a lot of those kind of security challenges you're alluding to in DeFi are not really a crypto-specific issue. I think we see, vulnerabilities across all sorts of different software, and on a relative basis, smart contracts are probably more secure and better audited than the average piece of code in the wild. It's just that your smart contract is fully public and holds a lot of money. And so when you have, a vulnerability there, it becomes front page news, whereas perhaps for a more traditional company that hasn't had this sort of financial event there, it's not as well publicized. I think otherwise DeFi seems to be in a pretty healthy place. We have, I think, broad adoption and interest in stablecoins as maybe the first product that people are interested in using on chain. In the developing world, people will adopt stablecoins in many cases as a savings account. Dollars are a fantastic product. I think that's been true for a long time, and certainly
Yes.
That's very true today. I think in the developed world, we see stablecoins being used for efficiency, primarily around things like payments today. And then I think a lot of those customers will, in the classic fintech sense, land and expand. We'll kind of start with stablecoins. We'll move over to credit and to lending. I spend a lot of time working with Morpho. We're investors in that project, and
Right.
they've seen a lot of success with the DeFi mullet, which I still love
Yes.
as a term. The idea of on-chain capital markets, but a more traditional front-end experience. And then I think kind of moving up the stack, we'll continue to see sort of strong product market fit and traction for investing products. Obviously, the story there in the last year or 18 months, I think, has been the explosion of perpetual futures pegged not just to crypto tokens, but to more traditional assets, where a lot of investors seem to be particularly interested in having the sort of products that crypto has built, but exposure to more traditional assets. And that has been a challenge, or maybe we've had an asset problem in the past. And I think a lot of that has been solved or ameliorated or improved in the last year or so.
Very interesting. Very interesting. So one thing that you touched on that I was not expecting, and it was the notion of these humans, us humans, building the software, right? And then now with the advent of AI and these large these LLM capabilities, being able to really exploit or identify the vulnerability in many of these protocols. And I mean, I guess on one side you say that's actually phenomenal because it's actually helping us harden these capabilities and these protocols. Obviously, on the other side, if they are bad actors, then that's a whole different story. So maybe let's talk about that a bit, right? Because every day now we are reading more and more news about AI. You talked about kind of your new fund and also your AI team within a16z. They're very focused on these areas. For those that are listening, right? Like many people are still asking, is it a hype? Is it just a bubble? Because the VCs and the companies are just trying to drive up valuation. And is there really that notion where AI is going to dramatically change things? Because at the end of the day, right, if you think about it, on one side, you hear about all these phenomenal performance and speed and capabilities and all that. On the other side, well, you hear all these people getting laid off because of AI. So there is a lot of contracting kind of viewpoints. What do you think?
Well, there's a lot there, many
Yes,
questions to go into. I think, hold on. Let's do, sorry. Thoughts on AI.
Yes.
I mean, many thoughts. One, it seems like the model quality has improved drastically, and perhaps there was an inflection point towards the end of last year, maybe with Opus 4.5, 4.6, something like that, where I think depending on your definition of AGI, we reached a point of AGI. It's also very clear that the LLMs are incredible at writing code. And I think for a lot of what we're talking about, the bottleneck previously has been engineering. I still think in specific domains, human beings will be better than the models at writing code. But I think for a lot of things where really you are recreating a system that has been built many times, now you have like an engineering team that never gets tired, that does not need to eat or sleep, is highly capable, and operates at a fraction of the cost that it previously would have been to kind of build out a team, especially in terms of the time to bring together and to hire a team. And so on that perspective, I think as a founder, an entrepreneur building a new business, you have incredible leverage. Obviously, there are kind of broader societal implications of such a significant technology being incorporated into the economy at large. But I think if we fast forward many years and look back, the results will be overwhelmingly positive. I guess another cut on this would be like what gets you a very performant model is like a ton of data, a ton of compute, a ton of energy. The short answer for what has happened in the last 10 years is just the bitter lesson of if we throw more data and compute and energy at a problem, the model will be more intelligent. And then if you look at like large parts of the Western world, energy consumption had tapered off. The growth in demand for energy had at least in the US reduced over the last 25 years. And I think there are a lot of reasons for that. But maybe one very simple reason would have been we didn't have something good to do with the energy. We didn't have kind of a marginal buyer of kilowatts. And today there's a marginal buyer of kilowatts at a very high price. And so you see kind of a drastic investment and deployment of new energy generation capacity. And then if you look at kind of the most important inputs in any society to quality of life or to GDP or GDP growth, energy is in many cases one of the most important or the most important. And so kind of broadly in society, we have an incredible increase in energy and intelligence. And I think there are a lot of sort of specific downstream impacts of that. But if you were to just look at that from a high level perspective and say, is this good or bad? My answer would obviously be, this is, very, very good. So I think there are a lot of nuances to that we can get into. But just thinking from kind of the most macro perspective, that's a lot of how I reason about it.
So let me ask you a question then. I remember reading a report recently from it was published from kind of from the VC side of things that 6 or 7 projects out of every 10 that goes to them for funding AI projects are using open source based models, especially those that are coming out of China. What's your view on that? We haven't talked about the DeepSeek moment for a while now, right? That was over a year ago. DeepSeek also just released their version 4, right? And performance metrics and benchmark and everything else. Are you seeing that as well, or is the notion of using which model that comes from which jurisdiction or country still a concern from an investment perspective when you put in a look into potential portfolio companies?
I think open source has been either the driver or one of the most important drivers for software broadly being successful in the last 50 years. So, yes. I could not be more in favor of open source. I think, that especially applies to AI models. If you're a little tech company, I think having highly performant open source AI models is an incredible boon to you as an entrepreneur, as a founder. I think in many cases, people would prefer to use the most performant model, even if the open source model is very, very good or very close. And so, at least with the companies we work with, and me personally, I spend a lot of time with Codex and with Claude. It seems like a lot of the open source models are, let's say, somewhere between 6, 12, 18 months behind in terms of performance and quality. And I think a big question as to crypto's role in AI has been, how do you think about decentralized AI? And there are a lot of answers to that, but I think one of the simplest is an open source model that you can host and run yourself is about as decentralized as you can possibly get. That's about as sort of democratized or accessible as humanly possible. And so yes, I take that as a very important positive, and something that a few years ago wouldn't obviously have been true, but I'm very happy that at least so far that has turned out to be the case.
But there is a geopolitical element to it now. I mean, there's a geopolitical element to everything these days, it seems like. Is that a concern, or is that really more, just noise more than anything else?
Yeah, I mean, I think there are a lot of inputs to being a founder of a
Mm,
company. I think, macroeconomic conditions or kind of geopolitical conditions, of course, have an impact. But in terms of the things we think about and focus on day to day, it's much more the kind of blocking and tackling of building a startup. I guess the other component of this would be if you're the founder of a Series A or Series B company, there probably is not like a huge impact you're going to have on kind of macro geopolitics. I think there is certainly a huge impact you will have on your specific startup and the people that work with you, your customers, your partners. At least me personally, like I of course read the news and like have thoughts about this, but I think in a very tangible sense, we're pretty focused on the day to day of trying to work with the best founders who are building the future in crypto.
very good answer. I like how you position it. Thank you for that. Let's move a little bit back to your fund as we look to wrap up this interview. So your new fund, most of the LPs are institutions, right? And you've also mentioned earlier that we're kind of going from a hoodie era into a what did you put it? The collar shirt era, right? So
Yep.
are we now? And there was something that you talked about earlier before when we were talking about foundational technology in terms of decentralizations, governance, and distributions and whatnot. As you have more and more institutions coming into the space, there's obviously the one side of it, which gets more assets being deployed, and the rigor and the trust element. But you're also starting to lose a lot more on the native aspect of what crypto and blockchain was there in the first place. Is that something that that is of concern? And I want to kind of hear your thought, right? Like we seem to be going very, very much in one direction now. Like we spun the pendulum so quickly
Mm-hmm.
within less than one cycle. Are we going to swing back, or are we going to keep going in this direction?
I think a lot of what you're referring to is, I would just say, pragmatism. For a long
Mm,
time, there's kind of a two by two chart that I think about a lot, where some of the axes is like pessimism, optimism,
mm,
indefinite, definite. I think
mm,
crypto as an industry for a long time was indefinitely optimistic. Like we're very excited about the future, but we're not sure precisely what we will build on a blockchain. I would say a
mm,
lot of the enthusiasm today is very definitely optimistic, and we know precisely the set of use cases and the set of customers that will move on chain. And I think that definite optimism is very focused in the adoption of blockchains by traditional financial institutions. I still think there is certainly indefinite optimism for other sorts of applications that I think will be successful in the fullness of time, but especially because maybe crypto is sort of hyper capitalist, or
mhm.
whatever sort of swings and volatility you have inherent to
Right.
capitalism, you have even more so in a totally permissionless and an open economy like the one we have on chain. And so I think there is certainly by sentiment an interest in indefinite optimism. And these are use cases that have worked in the past and could certainly be made more efficient with the blockchain. And so those are kind of the most interesting or compelling. I think another cut on this would be crypto is not just a technological revolution. It in many ways was a social or a cultural revolution as well, going all the way
Mm,
back to the Bitcoin white paper being written right after the great financial crisis, and in many ways positioning as a hedge against kind of government and inflation to begin with. Uh, and I think if you consider any revolution, you need a sort of strong inciting energy to convince people to get out of their seat and participate and have some broad transformation. But at some point, the revolution wins, right?
right.
I think maybe a lot about the American Revolution or the French Revolution, where you get a lot of what you want, and at some point, then you have to govern the country moving forward.
Right.
You
Right.
can no longer kind of do infinite revolution. And so I think for crypto as a space, in many ways, I think crypto people, so to speak, have gotten a lot of what they want. We have programmable, permissionless money for the entire world, and now a lot of the question moving forward is kind of how to govern, at least in that analogy of nation state revolution as well. And I think we're kind of figuring out what is the mainstream, pragmatic, long term set of use cases and kind of adoption path for crypto, which if you became interested in crypto because you liked the revolution culturally, maybe the mainstreaming is less interesting to you.
Mm.
I think a lot of the people that we worked with became interested in crypto for, a pragmatic set of reasons to build products that are loved by customers and deliver, real value to an end user. And if you kind of have that mindset and attitude and approach, I don't think we've ever been in a better position. So I think it sort of depends what got you interested in crypto and kind of what your focus is moving forward. But certainly, I think it's a great time to be a pragmatist building a new business on chain.
So if I were to ask you, as an industry, have we crossed the chasm? What's your point? What's your point of view?
I think we are in the process of crossing the chasm. I think it's probably hard to say at any point in time like this has happened or this has not. Speaking personally, I think a huge success for crypto as an industry would be if we stop calling crypto an industry, right? Like
Right.
no one says, I'm an internet company, I'm an internet fund.
Hmm.
Outside of, literal cloud service providers, there are not, consumer facing businesses that would describe themselves as like a cloud food delivery company. It's just a food delivery company. They're not people that would say like, I'm a digital payments e-commerce company. It's just like, I do e-commerce. I think we'll hopefully get to the point as an industry where it's not, I'm a crypto payments company or I'm a crypto exchange company. It's just, I'm a
Right.
payments company. I'm an exchange
Right.
company. I'm a lender. I'm so on and so forth. And I
Back
think
to the
that process is
basics.
certainly starting to happen.
Yeah, yeah. Back to the basics in that sense, right? Like crypto at the end of the day started as a technology and will continue on as a technology, and somehow along the way we started thinking about it as an asset class. And yes, some part of that is remains to be true. But I think a lot of what we're seeing now in the development area is definitely moving back into it is core infrastructure. It's another layer on top, make things easier. But what we do actually with it is still the same, right? We're still a society kind of, doing our thing. So
Hmm.
maybe the last question for you. Okay. So last question. Uh, Looking back, right? You've been doing this for some time and you work for the most prestigious, fintech VC in the world. If you were to look back when you first started, compared to where you are now, and like would you back in, let's say, 2017, 2018, like if you were to talk to yourself back in those days, do you think you would have predicted where things are and how quickly things have gone, or you'll be like, we have no idea. Like, what do you think? Like, if you were to talk to yourself back in those days when you first got in.
I think some things have moved faster than I would have anticipated. Certainly, kind of broad stablecoin adoption and
Mm,
penetration. If we wind the clock back to that period in time, stablecoins were not uh, the maybe the hottest category, right?
right.
I think maybe some component of this is also related to interest rates. But there was certainly a point in time where stablecoins were kind of this fringe, weird, strange category. And now, we've had the Genius Bill passed in the US, which has enshrined
Yep.
it in law. And we see incredible adoption from even the most traditional of companies. Obviously, I think there were a lot of other ideas that did not work as well as we would have hoped. I have a card game sitting on my desk called Burn Rate that came out in
Mm,
the mid 2000s. And the idea of the card game is that you're running a startup and your goal is to lose money as slowly as possible. You actually like literally can't make money. It's sort of a farce
okay.
about
That's
the
an
early
interesting
internet.
game. Mm,
I think it's the reason I keep it sitting on my desk is all of the idea cards were supposed to be jokes, as like, this is such a bad idea, it will never work. One of them was
mm,
magic internet money, which became Bitcoin. One of them was online
right.
pet food store, which became, Chewy, which started as pets.com. One of them was
Right.
online grocery delivery, which in the 90s was
Hmm.
Webvan, eventually became Instacart, things like DoorDash and Uber Eats. And so, it's a good reminder that there's a time for everything. There's kind of a time for every idea. And certainly a lot of our focus was on creator economies and sort of consumer applications of crypto, which I think are still very good ideas and probably will have great success in the future. Today, I think kind of the era we're in is very much focused on financial services and kind of this annealing process of crypto merging with fintech and hopefully with more traditional financial services. And so that's maybe how I would phrase it, or the reminder I keep for myself as how to think about timing and cycles.
Amazing, amazing. I think if I were to ask myself that question, the thing that shocked me the most will be how quickly, especially the US, where the regulatory environment has completely
Yes.
swung. Like you would have expected it to swing at some point, but how quickly it was done, I'm sure there's a lot of variety of different reasons, but how quickly it's done,
Yes.
and thereby drag the rest of the world along with it, which means
Hmm.
the entire globe is now looking at various different aspects of not only regulating, but actually building it as part of their kind of economy or economic and monetary policies. That I think would have surprised me if I were to kind of look back.
Hmm.
So
hundred
on
percent.
that front, yeah. Thank you so much. This was first of all, it's great to catch up again.
Thank you, Sean.
And you sit in the epicenter of a company and also in the city where a lot of these are happening. So a lot of the insight I'm sure will be tremendous for the audience to listen to. Thank you so much for coming on the show again. I look forward to see you.
That's very kind. It's great to see you, Sean. Thank you so much.